Good morning, Facebook. I'm Jill Malandrino with the Voice of America, and this is NASDAQ's Facebook Live. Joining me today is Bucky Isaacson. He is the founder of the Emerging Manager Forum. Now, this is taking place right here in New York City, Wednesday and Thursday of this week. Bucky, thank you so much for joining me at the NASDAQ. Tell us more about the forum and how did this all come about?
Well, the forum started 10 years ago, and we decided that we wanted to start it because emerging managers didn't have a forum where they could present their styles, their trading styles, and their trading philosophies to established investors.
So what exactly is an emerging manager? What type of investment styles do they utilize? Tell us a bit about that.
Emerging managers are basically alternative managers, and the definition of emerging manager depends on the investor. So CalPERS, for example, has a different definition of an emerging manager. They look for a long-only manager with at least $2.5 billion under management, where a small investor may look for someone that only has a few million under management. But generally the definition is somebody, a manager who hasn't been out shopped before to the general public, has a low profile.
Right. See, that's very interesting in the hedge fund world because I've covered some of this before where you're seeing a lot of firms looking to invest in smaller emerging manager groups with strategies that might not be so common out there, for example. So I feel like the emerging manager vertical is growing for that reason because there's strategies out there that not everyone is doing.
Generally, the emerging managers are in a better place to take advantage of small inefficiencies in the market.
Right.
And there's been a lot of press lately talking about the alpha that emerging managers can provide. So that's why the interest has been generated. So when we first started, I think the first one 10 years ago, we had maybe 100 people show up. Now we're at 500 that come in. And about 50% of the people that show up are investors, institutions, private family offices, individual investors. It's the whole gamut.
Are you seeing a lot of growth in private family offices?
Yeah, I think a lot of emerging managers pick out that marketplace, and there's a whole series of conferences that have been developed over the last year to look for family offices.
Right.
Gear their particular investments towards family offices. Now they're kind of migrating into doing almost robo-finance type of things. So robo-finance has become a big component of selecting emerging managers.
I would imagine a very prevalent topic at these conferences is passive versus active investing for that reason.
Yeah, exactly. So there really isn't a forum for emerging managers to show their wares. What happens is most of the conferences, like a CAP intro conference, are expensive. So they may charge anywhere from $2,500 to $10,000 to come to the conference, plus the cost of going to the venue and everything else. We're cheap for them to come to. So an emerging manager can come for $600 or $700.
Yeah, I was going to ask you, with all the conferences that are available to emerging managers, how do they pick and choose which ones they want to go to?
When people call, what I tell them, you have to look at the market that you're going to go after and try to raise money for. So if it's you're looking for family offices, there's those conferences. If you're looking for institutions, there's those types of conferences that gear towards institutions. But what you have to do is ask the conference provider, what's the demographic of the capital sources that come, the investors that show up, then you gear from there.
What topics do you think are going to be most widely discussed at the Manager Forum this Wednesday and Thursday?
Well, the two big topics now are cybersecurity and the financial burden that cybersecurity places on managers and how they have to change their management style to accommodate cybersecurity. And the other thing is the impact of robo-finance. Robo-finance on RIAs, robo-finance on family offices. Even institutions are looking at robo-finance as a way to diversify their assets.
Right. Well, I think, it's interesting if we go back to cybersecurity. I feel like a lot of emerging managers, whether it's hedge funds, mutual funds, ETF index providers, they just want solutions because there's so much going on with regulation, so much going on with the cost involved with technology and data and so forth. That seems to be the most relevant topic regardless of who you talk to now.
Sure. We've seen a big increase in the number of people that want to come as service providers that provide cybersecurity of one kind or another. And then like everything else, like any other type of service provider, you need to do your due diligence and check those people out and make sure their background is what can provide for you. complicated area right
Well,
now.
I mean, because managers at the end of the day, their primary job is to run their book and make money for their clients, but they're focusing so much on the cost and the amount of time it takes to be in line with regulations, be in line with all the data that's required in cybersecurity and so forth. And they probably, I would think, would just want to get back into investing and do what they do.
I think that it's really hard for a manager to be in business unless he's got at least 50 million under management, because there's no way that they can provide or afford to pay for the infrastructure that's involved, including cybersecurity. There's a statistic out there that 89% of the managers that start up never reach $100 million.
Right.
So it's, very few managers are successful.
Well, what's your advice for emerging managers, even those first getting into the forefront of the industry and those that have been around longer? Getting back to what we were saying before, you don't want to get too big because you don't want to get out of that emerging manager category. Right. So what happens when, let's say a fund is doing really well and everyone wants to put their assets into it? What's your advice for them there? Do you stay small?
The other thing that happens in today's market is most managers are emerging managers are 1 and 2 or 3 person shops.
Right.
They're like a cottage industry. Again, another statistics that's out there is only about 20% of the investment decision is based on track record. The rest is based on infrastructure, having proper due diligence done, the marketability of the program or how the person presents themselves. I think what most managers should do when they start out is look at their budget and decide how much money they can spend on marketing in any given year and how many days they can afford to be on the road.
Right.
And then you can gear your marketing plan around that and figure out what you're going to do from there.
So what do you think the ideal range is to have under management?
I think to break even and provide yourself a living, you need at least $50 million.
Right.
It's less is very difficult with the regulatory environment we're facing. And if someone goes on the road to market themselves, the cost to be on the road is about $1,000 a day. When you figure your plane fare, your meals, cab fare, phone costs, the cost of
And you're also not in front of your screens.
Yeah.
So.
Right. So it's expensive. So how many days can you afford to be on the road at $1,000 a day and contact people? And a lot of the investment decision is still based on face-to-face contact.
Yeah.
And meeting the person, because if you're the allocator and you're allocating for a family office or whoever it is and the manager blows up, you don't want to be responsible for that, and that's led to the growth of consultants.
Yes, and I would agree with you there. It's always different when you can have face-to-face contact and have a handshake and someone that you can reach out to. So, final question, do you think it's a high barrier to entry for emerging managers to break out here?
Yeah, I think it's it's a high entry to be successful.
Right.
Become an emerging manager, it's not difficult, but very few of them ever get beyond mom and pop raising money. And at the conference, we see managers and they make terrible presentations. They're not able to differentiate themselves from their competition in any way. It's almost like everybody is issued a textbook on how to build a pitch book, because they all look the same, all the pitches are the same, and you have to differentiate yourself.
Right, especially if you're getting all these pitches sent to you all day long, you have to find something that's going to make you want to look.
Sure, exactly. A lot of times that's the personal interface.
That is true. Well, thank you very much for joining us here at
Thank
the
you
NASDAQ.
for having me.
And thank you, Facebook, as always, for joining me. I'm Jill Malandrino with the Voice of America, and this is NASDAQ's Facebook Live.